Welcome to your NAB Trade Top 3. I'm your host, Juliette Sarli. Woodside Energy's full-year net profit more than doubled as it nears a decision on building a natural gas project in Louisiana that coincides with the US government easing regulations. Woodside reported a net profit of $3.57 billion for the full year. That was up from $1.6 billion a year ago when it booked hefty impairment charges. A record year for oil and gas production in 2024 helped to offset a 6% drop in sales revenue as Woodside realised lower prices for its output. On an underlying basis, Woodside's profit totaled $2.88 billion, down 13% on a year ago, and it's paying a dividend of 53 cents per share, down from 60 cents a year ago. Domino says challenges remain, but it's confident its strategic reset will bear fruit, telling investors it's committed to delivering profitable growth alongside franchise and shareholder returns. Domino's sales and earnings were lower, with same-store sales growth down 0.6%. Stronger performance in Australia offset by continued weakness in Japan and France. The company hasn't provided guidance, but it will pay a 55.5-cent interim dividend. Nine Entertainment is blaming weaker macro and advertising market conditions along with the loss of Meta revenue for a drop in profitability. But it says the calendar year has started well, with audience numbers and advertising interest improving. It says ad revenue in the March quarter is expected to be in the high single digits. Stan's subscriber numbers are expected to consolidate in the second half after a 16% rise in the first half. And Nine says its cost-cutting program has delivered, but warns its strategic and cultural transformation will lead to further restructuring in full years 25 and 26. It's expecting further cost efficiencies through to the end of full year 27 of more than $100 million, with between $10 to $20 million to be realised this financial year, on top of the previously guided $50 million. And that is your NAB Trade reporting season top 3.